Hello and welcome back to another video. Today we're going to talk about the Asian financial crisis of 1997. This crisis was a major economic event that affected many countries in the region, causing widespread financial turmoil and instability. In this video, we will explore the causes and consequences of the crisis, as well as its impact on the global economy. The Asian financial crisis, also called the Asian contagion, was triggered by a combination of factors. One of the primary causes was the rapid growth of these economies in the preceding years. Many countries in the region, such as Thailand, Indonesia, and South Korea, experienced tremendous economic growth in the 1980s and 1990s. However, this growth was fueled by large amounts of foreign capital, primarily in the form of loans from banks and other financial institutions. Another contributing factor was the fixed exchange rate regime that many of these countries had adopted. This meant that their currencies were pegged to the US dollar, and their central banks had to maintain this exchange rate by buying and selling their own currencies. This policy made their exports more competitive in international markets, but it also made their economies vulnerable to external shocks. A sequence of currency devaluations and other events began in July 1997 and spread across Asia. The crisis started in Thailand when the government ended the local currency's de facto peg to the US dollar after depleting much of the country's foreign exchange reserves trying to defend it against months of speculative pressure. Just weeks after Thailand stopped defending its currency, Malaysia, the Philippines, and Indonesia were also compelled to let their currencies fall as speculative market pressure built. By October, the crisis spread to South Korea, where a balance of payments crisis brought the government to the brink of default. Other economies also came under pressure, but those with solid economic fundamentals and hefty foreign exchange reserves fared much better. Hong Kong fended off several major but unsuccessful speculative attacks on its currency, which is pegged to the US dollar via a currency board system and backed by massive US dollar reserves. As the Thai baht fell, other Asian currencies fell, some precipitously. Across Asia, inflows of capital slowed or reversed. The Thai baht had been trading at about 26 to the US dollar before the crisis but lost half its value by the end of 1997, falling to 53 to the dollar by January 1998. The South Korean won fell from about 900 to the dollar to 1,695 by the end of 1997. The Indonesian rupiah, which had been trading at around 2,400 to the dollar in June 1997, plummeted to 14,900 by June 1998, less than one-sixth its pre-crisis level. Some of the more heavily affected countries fell into a severe recession. Indonesia's gross domestic product growth fell from 4.7% in 1997 to -13.1% in 1998. In the Philippines, it slid from 5.2% to -0.5% over the same period. Malaysia's GDP growth similarly slid from 7.3% in 1997 to -7.4% in 1998, while South Korea's contracted from 6.2% to -5.1%. In Indonesia, the ensuing economic crisis led to the collapse of the three-decade-old dictatorship of President Suharto. The crisis was alleviated by intervention from the International Monetary Fund to stem the crisis with loans to stabilize the affected economies. The IMF and others lent roughly $118 billion in short-term loans to Thailand, Indonesia, and South Korea. The bailouts came with conditions, though. Governments had to raise taxes, cut spending, and eliminate many subsidies. By 1999, many of the affected countries began to show signs of recovery. Other financial institutions also intervened. For example, in December 1997, the U.S. Federal Reserve Bank brokered a deal under which U.S. banks owed money to South Korean companies on short-term loans and voluntarily agreed to roll them over into medium-term loans. The impact of the crisis was not limited to Asia. The collapse of these economies sent shockwaves throughout the global financial system. Investors around the world were suddenly much more risk-averse, and many of them pulled their money out of emerging markets altogether. This had a knock-on effect on other economies, such as Russia and Brazil, which also experienced financial crises in the following years. The Asian financial crisis was a painful experience for many people and economies. However, it also taught us some valuable lessons. For example, it highlighted the importance of maintaining sound macroeconomic policies, such as flexible exchange rates and prudent fiscal management. It also underscored the need for effective regulation of the banking sector and other financial institutions. Furthermore, the crisis also demonstrated the importance of international cooperation and coordination in responding to financial crises. The International Monetary Fund played a key role in providing emergency financial assistance to affected countries and promoting reforms to prevent similar crises from occurring in the future. In conclusion, the Asian financial crisis of 1997 was a significant event in the history of the global economy. It was a painful experience for many people and economies, but it also taught us some valuable lessons. By learning from the mistakes of the past, we can better prepare ourselves for the challenges of the future. Thanks for watching and hope you found this informative. If you enjoyed it, please be sure to like, comment, and subscribe for more videos like this in the future. See you at the next one.